Well, welcome everyone. Thank you. This is a great turnout for our Home Buyers Workshop. Town and Country Bank is presenting this workshop today, and hopefully by the time you're through with this workshop, everybody will be excited and motivated and educated to go out and buy a home, or build a home, whatever your choice is. Okay. I'm Teresa Hurst, and I am the mortgage loan manager at Town and Country Bank. And I've been at the bank for over, let me see, I might have to look at this, 38 years. So I've got a lot of experience in mortgage lending. And I've got some great folks here too that have a lot of experience as well. We have over 132 years experience in mortgages, and I have Jessica Leek, I have Carla Smith, and Cindy Sanders. And we also have another mortgage loan officer at our bank, and she is out today because she is sick with the flu. But we have our great assistants that you met as you checked in. There's Carrie Morris right there in the back, and there's Benita Riggs. And they're the ones that really do all the work, okay? Just saying. I manage a great group of ladies at the bank, but also we not only do mortgage loans at the bank. Our bank, we're a full-service bank, so we can take care of you from a young child opening their savings account to when they buy their car, when they're ready to go off to college, buy their home, open a business, invest for your retirement. We can take you from all the way through your life. So we're there for any of your financial needs and wants. So we have finger food over here. I think most of you all helped yourself, but feel free anytime, to get up and get you a plate. We have water. The restrooms are down the hall and to your right. We're going to try to keep this within an hour, and we're going to also be around after the workshop. So if any of you all have any questions or want some one-on-one feedback, feel free to come to any of the mortgage lenders and ask us questions, or call us at the bank and we'll set up an appointment with you and meet with you one-on-one. So there is also a coupon that we will mail out to you. Everybody's signed in, so we will mail you a $200 coupon to use towards your closing cost. There's no expiration, so you can use it this year, you can use it next year, but the only stipulation is the loan has to close with Town and Country Bank. So you can't use it at any other bank except Town and Country Bank. So, and then we'll mail that out to you along with a survey. So if you could complete the survey, and that gives us feedback on how we can always become better. So we would appreciate that. So you all have your workbooks in front of you, okay? And in your workbook, today's agenda, we're going to talk about how we can get ready to buy a home, buying your home, getting your mortgage, closing your home loan, and then being a successful homeowner. So you have your guide there. We're not going to go page by page with that guide, but that's just going to give you additional material when you get home. You can kind of look through it and you can say, oh yeah, I remember them talking about that. So it's a really good guide, and it was presented to us by MGIC, so they're the ones that sponsored that guide. And so really the first step is getting ready to buy a home, and that will be presented by Miss Cindy Sanders.
There you go. I'm going to kind of live this because this was Kristen's part, and she's home nursing the flu. But what we'll cover in this one is just getting started. Just even your basics, if you don't know anything, just about opening a checking, a savings, kind of start paying yourself and building up an account for when you are ready to purchase a home. Applying for credit gradually, as far as getting a bank, we offer credit cards there, a retail store, Lowe's, Kohl's, Penny's, any of those, but we advise that you use them wisely. They're easy to get, but sometimes those rates are high, so we would tell you to keep it within 30%. If they give you a limit of $100, stay around the $30 each month and pay it off. Something about that 30%, it'll help your credit score go up. Pay them off monthly so you're not actually paying those high rates interest back to them. What is credit? It's just obtaining something now so that when you're ready, that score's going to help you too. There's open ends, which is the revolving, the credit cards, the line of credits. If you've got one of those, just where you can draw up and down. Just you can pay it off and go back up the next month. Sorry, stuttering here. And then there's the closed end, like your car loans, personal loans. You could be secured by a savings account. I think I went off. And those are just based on a monthly payment. And then the scores will add up, the revolving plus the installment, and those kind of come up with the FICO score. And the way they come up with it, it's some big mathematical equation, but this is kind of how they let us know. It depends on how long you've had it, the types you've had, and the payment history. Definitely paying it on time every month. And again, the amount you owe, keeping it below, again, something about that 30%. And I know I'm keeping, yes ma'am? They'll count as an installment, sweetheart. They sure do. Absolutely. But again, that 30%, something on the revolving, they give you points for that. And just things to remember when you're establishing it, pay on time, keeping it for about a year is kind of really gets that score up. And again, there's that 30% rule. And make a budget, pay yourself again, and we advise you to check your credit report once a year with the annual credit report.com. Just double check. I've seen things show up on people's credit that they had no idea. It's not theirs. Socials off one or two numbers. But things can be repaired, and we'll help you. We'll write letters. We'll sit with you, get you on a budget. It can take time, but we'll be there to help you through it. Again, repairing it, just start making those payments on time, and it won't take you as long as you think. We'll help you get there. Again, saving and budgeting, stick to that budget that you've set for yourself. And sit down with yourself and be honest about your wants and your needs. Prevent and reduce those impulse spending habits you got so that you're saving for your house. So you'll have that budget. If you took $25 a week, it would be $1,300 a year. So as far as those fancy coffees that you like to go out and drink, if you can save and stop doing those, you're going to save over the year. It'll really add up. Again, just make logical changes to your budget. Small sacrifices now will add up in the long run for you. You don't have to be, it doesn't have to be gang bang all at the same time. Just set yourself small goals, ones that you know that you can obtain. There is a budget, little worksheet in there, page 41. That way you can actually set yourself that budget. All right, pre-qualifying for a mortgage. If you think you're ready, we've done all the things we need to do, come on in, we'll help you. Bring in paycheck stubs, W-2s, we'll sit with you. We'll work out your debt to income. We'll figure out what purchase price you guys can handle. Again, you might want that $300,000 starting out home, but it might be $150,000 that you can handle. We'll sit with you again on your income, and we'll back you in. There's all kinds of different loans, whether it's 100% financing, the RHS, 3.5% will work with you to find out what your budget is, how much you need for a down payment, and what the closing costs are. But we'll help you get in there for what you guys can afford. Your employment history, if you've switched, we would just need W-2s from all of your employers. And again, 30 days of current paycheck stubs from your current employer. If you don't bank with us, we would need 2 months of your statements, checking and savings. But if you do bank with us, we can pull those for you and you don't have to. Questions on credit, savings, or budgeting to get you pre-qualified? No? Uh-oh. All right. Yay! Oh, there you go, hon. And you're next.
Everybody did sign in. Everybody signed in on this sheet. This is how you get $200 credit on some of this. And in about a week or two, you'll have a letter in your mailbox with a $200 credit for your home. Nobody's free.
Hi everyone, I'm Carla Smith and I'm going to talk about our next section, and it is buying your home. So when it comes to buying your home, the first thing, wrong way. The first thing that we're going to do is start thinking about what we want to look for in our home. So we're going to start with trying to narrow down what are our must-haves and what are our nice-to-haves. These are our needs versus our wants. So if you all want to look at it, there is a comparison chart on page 43 in your workbook there that you can use. It gives you a little comparison for 3 homes that you can start kind of comparing once you start looking at homes. But things to consider when you're trying to narrow those down are location, the neighborhood. If you've got children that are already in schools, you know, what school district is the house in? Are you going to have to move schools, or are you going to have a long commute to get your child to school? Will they be able to take a bus, or would you have to take them? Taxes. There are multiple tax districts in the county. So that's something that you may have to consider. The age of the home. The age of the home could cause you to have higher cost of maintenance, upkeep, things you may have to spend money on to update as soon as you move in versus things that may, the home may be move-in ready. Utilities, the cost of utilities, gas versus electric, things like that. Condition, maintenance concerns, size, space, how many bedrooms, how many people are going to be in the house, the backyard. Do you have a fenced-in yard? Do you need a fence? Do you have a dog that'll need a place to run around? All of these are things that you're going to have to really think about when you start trying to decide what kind of home you need, and you'll have to decide what are needs versus wants so that you can narrow that down, and what are things that you can, maybe look for, or things that you can upgrade to over time. So who's going to help you when it comes time to buy this home? So there are real estate agents and there are loan officers. There are buyer's agents and there are seller's agents. A buyer's agent is an agent that works for the buyer. That would be someone that you call whether they have a house listed or not, and they're going to just compile homes for you to look at. They don't necessarily have a house listed that you want to look at. They just get you a bunch of properties to look at, and they reach out to the listing agent for you. They are going to negotiate on your behalf, and they're going to make sure that you get a good deal on your home. They're going to work for you. Also keep in mind that when a house is listed, the seller is going to pay the commission. The commission is already worked in when a house is listed, so that's already factored in. You're not going to pay an additional commission just because you have gone out and found a buyer's agent. So a seller's agent is the agent who has listed the property. If you see a property already listed, it is okay to call the listing agent, and they can work as a buyer's agent also. And in that case, they would just be a buyer's and a seller's agent. And that is okay. That is something that they're going to talk to you about up front, and they're going to make sure you understand that they are working for both of you. Okay? And then loan officers. We've got 5 wonderful loan officers at Town and Country Bank, and we do help people through the process, whether they have agents or whether they are dealing with a for sale by owner. And we are happy to help you through the process either way, whether you have an agent or not, okay? We can help you out in any way through the whole process. So some expenses to expect during the mortgage process. Some of those expenses are things that you will have to pay for before you get to the closing table, and that would be an earnest money deposit. This is something that you're going to put down when you make your offer, and this is something that will be held by the real estate office, and it's typically anywhere from $100 to $1,000, just depending on the purchase price of the property, and it's something that you would negotiate with the agent when you're there. They would hold that in their escrow account until closing, and it would be credited to you on your closing disclosure. You're not going to pay it twice. It goes toward your purchase price. It is, something that counts toward that. It's not something that you pay then and pay it in addition to your purchase price. That just shows good faith. It lets them know that you're serious. You do want to buy this house. You have gone through the process of getting pre-approved. You definitely want to go forward as long as, everything works out the way it's supposed to. The house appraises, it passes inspection. Of course, you will put things in your contract, and this is something you'll work out with your agent, that will cover you that if the house doesn't appraise or it doesn't pass inspection, you get that earnest money deposit back. A home inspection is something else that you would pay prior to closing, and that is in your best interest. It protects you. It lets you know if there are any issues with the home, and it saves you from buying a home that could end up being a money pit. It tells you if there are any structural issues. It lets you know if there are any major repairs that may be need to be done on the property. It's also a good negotiation tool if there's anything that needs to be repaired that maybe the seller should fix before you close. So those are all that's something that you're going to pay ahead of time, but it's something that's going to protect you in the long run. And then at closing, you would pay your closing cost. You would also pay your first year of homeowner's insurance, and you would start an escrow account if you're doing a loan that requires it or if you have chosen to have that. So an escrow account, a lot of you have probably not necessarily heard of an escrow account before. That's an account that's going to be held by your lender that would cover your homeowner's insurance and your taxes for you. Each month as you make your mortgage payments, you would pay 1/12 of your annual homeowner's insurance and taxes, and then when those bills come out each year, your lender is going to pay that for you. So instead of every October when that tax bill comes out, you having to come up with $1,500 to $3,000, it comes from your lender, and you've paid it in smaller increments, which is, a little easier when you're first getting, your first home and you've got this large bill that you're not used to paying. So now you've found your home and it's time to make an offer. So what are some things that you need to consider? So things that might influence your offer. So things you would need to consider. Your pre-approval letter is something that a seller is going to want, and that's where we come in. You come and see us with the items that Cindy told you to bring, your pay stubs and your W-2s and bank statements, and we're going to get you that pre-approval letter, and that's something that the seller is going to want. They're going to want to see that. So that would be something that they would consider it to be contingent on. Some contingencies that you're going to put into that contract is that home inspection that we mentioned. You're going to want to make sure that the home passes inspection and that it passes appraisal. And then what are counteroffers? A counteroffer is something that happens often when you're making offers on homes, and that's, say they start with a listing price of $150, but you want to come in maybe a little bit lower. You talk to your agent. they help you decide a reasonable offer, and you start somewhere a little bit lower, but maybe the seller's not quite happy with that. It is very common for them to come back a little bit higher and for you guys to go back and forth. So don't be scared if you make an offer that's a little bit lower and they come back with something else. That's okay. Just make sure that you're talking to your agent. They will help walk you through that, and they'll help make sure that you're not going too low, you're not going to scare the seller off, and that you're still making reasonable offers. And it's okay. It's okay to counteroffer. It's very common. When you do have the home inspection, some things to expect. It is going to take a couple hours. Again, as we said, it's something that you should put in as a contingency. It is a negotiation tool. And it is something that just helps you to understand your home a little better. So, do you guys have any questions about finding your home? Yes, time for another door prize.
That's okay. If you draw your name out, it'd be fair and square.
Nope. All right, so next we have Teresa Hurst.
Okay, now can you hear me? I am going to talk about getting a mortgage, okay? Question on home inspections. Yes, the buyer. Yeah, after the home inspections, they usually. So, and then, yeah, there you go. Everything's negotiable. Okay, I'm going to talk about getting your mortgage. And one thing that I failed to mention in my introduction is that Town and Country Bank, we have been voted the best mortgage company by the readers of Nelson County Standard for the last 5 years. So that shows you we know what we're doing, and we've got a lot of mortgage products available to help you buy a home, and we're passionate about it as well. But first thing, what is in your monthly mortgage payment? It's called PITI, principal, interest, taxes, and insurance. So your principal is the portion of that payment that is used to reduce the loan balance. And when you're on a 30-year mortgage, it takes, at the very beginning, you're paying a lot more interest than money that's going towards your principal, okay? And the interest is the portion of your payment used to pay what interest is due. Right now, with the lower interest rates, you can see your mortgage payments work so much better than when the interest rates are higher. So taxes, like Carla talked about, escrow accounts. So this is where your taxes and insurance are added to your payment. And so the taxes are 1/12 of your annual property tax bills. And then your insurance is 1/12 of your annual homeowner's bill. And you go out and get your homeowner's insurance with whoever you want. You just bring the bill, we collect it, and then we collect 1/12 each month, and at the end of the year, then we pay your homeowner's insurance. And you can switch and shop and for your homeowner's insurance because you're the owner of the property. Types of mortgages and home loans. There's fixed rate mortgages and there's non-fixed rate mortgages. Of course, fixed rate mortgages are your most popular because you do not ever have to worry about your payment, that principal and interest part of your payment ever going up. So that's fixed. Then you also have non-fixed rate mortgages, which aren't bad either, but those are called ARM products, adjustable rate mortgages. And so usually on an ARM product, it's fixed for so long, and then after a certain length, then it'll adjust. But again, you just have to work with your lender and figure out what type of loan is best for you. So there are many different, and there's so many different types, and it's hard for you to know. You just have to trust your lender and let them decide what's best. And we'll give you several scenarios. Mortgage products and down payment options. There's VA loans. Of course, you have to be a veteran to get a VA loan, and that's a 0 down payment. So you can get a VA loan with no money down. And FHA loans, that's through Federal Housing Administration, that requires a 3.5% down payment. Then there's rural housing loans, and rural housings, that's 100% financing as well. And we'll go over some of the guidelines for some of these products. Then there's conventional loans, and normally the people that get conventional loans, usually it's sometimes it's might be your second home, or you have really high credit scores. And again, that's for us to kind of show you different scenarios, and you figure out which product's best for you. But there's conventional loans with no PMI, and when I say PMI, that's private mortgage insurance, and there's a screen on that. And then conventional loans with PMI. So if you have a 20% down payment, you do not have to pay PMI, and we'll get to that screen in just a minute. And then Town and Country Bank, we also have, we can do government loans, and all those are government loans that we'll sell off. And then we also portfolio loans, which we keep in-house with us. And so we have like a loan that's 15% down with no PMI. So private mortgage insurance, that's that PMI word I was just talking about. But PMI it's not homeowners insurance, it's not life insurance, it doesn't protect you at all. PMI is if you don't have a down payment, the mortgage company is going to go out and buy insurance should your loan go into default. So the PMI protects the lender, okay? So, but it's really good because it helps you be able to buy a home sooner than waiting until you can reach for a 20% down payment. And on conventional loans, PMIs, it falls off after your loan gets to a 78% loan to value. So it'll just go away one day. And on FHA loans and RHS loans, they're on there for the life of the loan. Okay? So, mortgage products, limitations, and guidelines. This doesn't have all the limitations. There's a lot, but we know a lot because we've been doing this for a long time. But VA loans, again, you have to be a veteran. You have to have your certificate of eligibility. And FHA loans, no income requirements. Anybody can get an FHA loan, okay? They do have limits on their purchase price, but 3.5% down is a must. So that 3.5% down has to come from you or through a grant. And then you can get the seller to pay closing costs, or we can help pay closing costs. RHS loans, okay, there is an income guideline on that. This is 100% financing. So if you have a 1 to 4 person household and your income household is under $86,850, you can get 100% financing loan through rural housing. And it is an awesome loan. I'll go over that in just a minute. So, and if your household is 5 or more, then it's $114,650. Okay? And that's for Nelson County and most counties around here. Now, not all counties have rural housing loans. Jefferson County, Fayette County, they do not. Most of Bullitt County does, but there's areas that doesn't. Hardin County, there's areas that aren't qualified, but Nelson, Washington, Marion, LaRue, we can get RHS loans in any of those counties. It's a great loan. And the key thing is, I know Cindy touched on credit, okay? Well, when you're shopping for a mortgage and when we're quoting you an interest rate, again, the higher your credit, the better your interest rate. So really try to work hard on getting your credit score up, or come and get pre-qualified, and we'll give you tips on how to get your credit score up. Okay? But most loan products usually require at least a 620 credit score. So, welcome home grant money. This, every year this time, in March, the 1st of March, grant money's available. And that's $5,000 for a household, but if you are a active duty member or honorably discharged veteran, you can get $7,500. Okay, so last year we did over $100,000 in grant money. So we gave a lot of households grant money. So on that FHA 3.5% down, you could use the grant money for that. So, or the RHS loan, you could use the grant money to pay your closing fees. So, but that also has income guidelines. So in Nelson County, for a 2-person household, the income is $63,456. You make under that, you qualify for a loan, you get the grant. It's that simple, as long as it's a single family residence. Okay? And then 3 or more in the household, the household, and this is household income, $74,032. Washington County, $60,192 for a 1 to 2 person household. So it's great. It's a forgivable grant over 5 years. Only deal is you have to bring $500 of your own money to closing. So that means you just have to have $500 into the game. It's as good as it gets. Mortgage applications. I brought an application just to show you what one looks like. It can be kind of intimidating, but it's really, you come in, we fill it out, we can fill it out in 4 minutes or less. You know, really, because it's just name, address, social, how much money you have in the bank, your debts, and then we complete that for a pre-qualification. And then, like Cindy said, we need your last 2 years W-2s, your employment history for 2 years, your current paycheck stubs for 30 days, and if you don't bank with us, then we need, which I don't know why you wouldn't, but anyway, we would need your savings and checking account for just the past 2 months, okay? And then we can pre-qualify you right then. We pull the credit, we pre-qualify you, we tell you what price range you need to look for, what kind of house mortgage. We can show you different scenarios. You know, this is if you did RHS, this is if you're a veteran, you wanted to do this, or go FHA. So, and because some properties we might run you FHA because that property might not qualify for rural housing because it might have more acreage or something, so we'll have to run it through FHA. So, but we know what would go with what. So, and then the lender, after we pre-qualify you, then we're going to give you a loan estimate. And you all have that loan estimate in your packet. And it's this one called loan estimate. Okay? And I did this loan estimate, and I think we're kind of go over this too, just so you can see what it says. I did it for an RHS homeowner. And the reason I did it for an RHS homeowner, because most home buyers get their loans through RHS because it's 100% financing. Well, my RHS homeowner here, he is also getting the grant. So, and then they came to our home buyer workshop and they got $200. So, so what I did, I had an applicant that made $42,000, okay? And this is what they could qualify for. I plugged in the purchase price of $159,500. And the reason where I got that number is because that's kind of like the median price home anymore, okay, is $159,500. So of course, you know, you can buy something cheaper and smaller as well, but I just, for a $42,000 household income, they could afford a $159,500 house based on if their other outgoing debt did not exceed $400 a month. Okay, so they had a car payment of $250, they had a student loan payment of $100, and then they had a minimum credit card payment of $50. So that was my scenario borrower. Okay, so they bought a house for $159,500. It's a 30-year fixed rate. Today's rates for rural housing are 3.5%. Now that's cheap. Okay, and that is a fixed rate for 30 years. Okay. So based on that, their monthly principal and interest payment was $723.41. Again, that's principal and interest only, okay? Then when you go down to the projected payments, it also counts in there the mortgage insurance, which again is that insurance that the mortgage company is buying to insure their loan, okay? And that's $47 a month. And then we estimated the escrows to be $246 a month. So their total payment, $1,016, okay? And at the very bottom it says estimated cash to close. My buyers only had to bring $500 because they're getting the grant. They had to bring $500 to closing, okay? So when we turn the page, this lady's getting really excited. She's like, oh yes, it is good, isn't it? So when we look at page 2 at the closing cost detail, it shows you all the fees associated with buying a home. You know, there's underwriting fee, processing fee, appraisal fee, USDA guarantee fee. You will finance that. You will not have to pay that. That's added to your mortgage. But then you have your title search that the attorney is going to do, the title insurance, closing fee, closing protection letter, recording fee to record your deed and mortgage. And then you're going to pay your 1-year homeowner's insurance at closing. And then you're going to build your escrow account, and that's under G. So, and then you've got your pest inspection in there. And then owner's title insurance, which is optional. So you don't have to buy owner's title insurance, but that protects you and protects the title of your home, okay? So under the calculating cash to close, where I have, first in J I have the lender's credit of $200, that's for your workshop. And then the adjustments and other credits, the $5,000, that's if you qualified for the Welcome Home Grant money, okay? So that's your scenario. If you're a RHS homeowner, you could get into the house for $500. It's about as good as it gets, and that's a really good rate. And FHA rates are running 3.5, so the rates are really, really low right now. Do we have a question? I'm sorry. They're granting you a grant. Yes, and the grant money is only available for limited time, okay? The window of the grant money opens on March the 3rd, okay? And then it's first come, first serve, okay? Last year we had grant money until about early May, and then we were notified that it was gone. And it comes through Federal Home Loan Bank of Cincinnati. And it's really good. Oh, I'm sorry. Yes, Bridget. Yes, it is, but you have to close on it. You cannot use it during your construction phase. You have to use it for your permanent financing loan, and that has to be completed and closed by December 1st of that year. Yes. She asked if it could be used for construction loans. Okay. Okay, good. Well, you're good.
How much are like when you go out there and have an inspection? How much is that?
Like a home inspection, normally $350 to $500, depending on the size of the home.
So what happens if I do that and I underwrite and then it comes back and something's wrong and we don't want the home? Do we pay that still, or does the seller?
No, you have to pay for the home inspection. And we don't order the appraisal or anything until you say, home inspection's good, let's fly. And the grant money is reserved per house. So like say you came in, you applied for a loan, and it's at 123 Anywhere Street. You had your home inspection. Okay, we reserved the grant money for that 123 Anywhere Street, and after your home inspection, you said, "Oh, Teresa, no, we do not want that house." Then we cancel out that grant. Then you find one somewhere else. Hopefully, the grant money's still available, and we reserve grant money on that. Okay. It's until it's all used up, and like last year, it was still available early May, and then it was used up. Yeah. So what you have to do, you just have to call and see. Several institutions that participate get $200,000 per institution. So, okay. So processing and underwriting. So we've pre-qualified you. We've taken your application. You found your house. And so the loan is reviewed by the lender. The home inspection is done. Then that's when we order the appraisal. We contact the attorney. The attorney does the title search. We order the title insurance. We do a flood determination to determine if it's in the floodplain. If it's in the floodplain, there are certain loans you can get. You can get an FHA loan, but not an RHS loan in the floodplain. And if it's in the floodplain, you have to carry flood insurance, and that's very costly as well. And then homeowner's insurance. Then we request your homeowner's insurance. You tell us what agent you're going with, and we contact your homeowner's insurance agent, and we get your insurance. Then the loan is sent to the underwriter for final approval, and the whole loan process takes normally, we always say, around 30 to 45 days. Okay, just to make sure. And when we lock you in, when you come in and you've got a contract and you're signing all your docs, we're going to lock you in. Okay, so you don't have to worry about interest rates going up. Now if they go down, but don't worry. Just don't worry. Okay. All right. Do we have any more questions on the home pre-application process? Okay, there were some really good questions. So thank you. All right, our next presenter will be closing your home loan, and Jessica Lee will present this after we have another door prize. All right, we'll get Mike to draw.
Alrighty, so in this section we're going to talk about closing your home loan. So, you've applied, you found your house, you waited the 30 to 45 days, and now the time has came to close on your loan. So, in preparing for the closing, you will receive a closing disclosure. So again, this is in your packet. We have the same example that kind of mirrors the loan estimate that Teresa has. So you can see, if you compare them side by side, they look very similar in format, and so that's so that you can really easily compare the information, make sure everything matches, pretty closely to what we told you in the beginning, versus now this is officially the end. This is all of the correct numbers for what your loan is going to be for. So you will receive your closing disclosure at least 3 days before closing. So you've got, time to review it and, make sure everything is right before you go to that closing. So you can see the dates where it was issued and your closing date. And then again, you've still got your 30-year fixed rate over there, your amount and your interest rate. All of that in the same format is listed with your monthly payment, and then again it breaks down your mortgage insurance and your property taxes and homeowners insurance. So all of those things are still broke down there for you. And then the final number there, the cash to close, is $500.43. So that's what you'll have to bring when you come to the closing. We also have the little note here. You'll have to bring that in like an official bank check, like a cashier's check. You can't bring like a personal check or anything. So whatever that bottom number is what you'll get in your official check. Again, your final closing costs are on the second page. So sometimes, if the appraisal was a little less than what they estimated, those things may change just a little bit, but you can compare those numbers, and these are exactly what will be paid out at closing. You'll still see your lender's credit, the $200 for coming to the class. I know the prepaid interest changed a little bit because this loan, this hypothetical situation here, it closed on the 27th of the month, so there was only 3 days of interest versus I think there was 15 quoted on the loan estimate. So those things can sort of change a little bit. And then on the third page, you will see that there was a principal reduction of $591. And that had to be done on this scenario because to qualify for that grant, you have to bring $500. So we actually ended up reducing the principal loan amount with that $591 payment so that we could make the end number $500. And then the other thing, any questions on the closing disclosure? Okay. And you have to bring to closing valid identification. So typically just your driver's license. Just make sure it's not expired or anything like that. And the next slide. So who will be there? So you, of course, your lender will be there with you. And then the real estate agent, and then the seller of the home, and if their real estate agent would be there. And then during the closing, you'll have to sign several papers. So you'll sign your closing disclosure, which, like I said, you will have that in advance, but you'll sign that at closing. You'll also sign your note. The mortgage and the deed, those are the documents that get filed at the county clerk. And then there will be some other documents and disclosures as far as like agreement to provide insurance and some different things like that. But don't hesitate. If you have any questions, make sure and ask. So there's a lot of papers and a lot of things going on that day. So if you're not sure about something, ask your lender, ask the closing agent, and make sure that you know exactly what's going on. And then congratulations, you're a homeowner. So after that closing and signing is done, it's official, it's your home. And so then there are a few things to do afterward. Of course, you'll get the keys to your new home. And then those are just some important questions to ask. We also included in the packet a little checklist where you can kind of write down like what company is the water with, the electric, who provides the TV and the internet, what day does the trash pickup come. So some things just to think about that you'll need to know about your new home. And then on the back side is a little checklist of who all to notify that you have a new address, just to make sure that nothing gets left out. There's a lot of places that you don't really think about, but they need to know that you've moved. And any questions on the closing? Okay, and we'll do another door prize.
So congratulations, you're a homeowner. But now being a homeowner comes with responsibilities. Truly, there's no place like home, but the boots show you there's work to be done still. So there's no landlord to call now when your grass gets a little crazy. You've got to purchase that lawnmower, maybe the weed eater. routine maintenance, changing the filters in the furnace, those are things, again, the landlord you can't call, you have to budget still for those items. Power tools, equipment. If you purchase a house, you might want to go in, you want to change the paint colors, those type things we're going to have to budget. In your workbook, there are pages 45 and 46, there's a little budget that'll help you for maintenance and upkeep and stuff. And again, expect the unexpected. God forbid we have a windstorm and the neighbor's tree lands on your house. Of course, they would be responsible, but if it's your tree and there goes your gutter, insurance, you might have a deductible. So you'll have to, again, budget, set that money back. Again, just expect the unexpected. Pay yourself, save the coins, and again, remember those small sacrifices do add up. And don't forget to enjoy your home. That's all. That's it, guys.